Hello everyone, we are going to presentation 2. We are group 7. Our group members are Eamon, Janev, Omer, and me, I'm Wing Chi. The country we are going to present is about Colombia. The Colombia's banking system is well developed and regulated. Colombia is a member of the Financial Action Task Force of Latin America and therefore has to comply with the FATF standards. Local and international banks, credit unions, and cooperatives, they are overseen by the Superintendency of Finance of Colombia, which ensure compliance with strict regulatory standards. It is also and structures. About the structures of Colombia, actually, Colombia adheres to international standards and best practice for the structure, supervision, and regulation of the financial sector. For the KYC, KYP suitability process, every financial service needs to accomplish these requirements. Step 1, identifying the client and their risk profile. To identify your client and assess their risk profile, this involves gathering essential information about the client, such as their name, address, occupation, and source of income. Step 2 is about to collect the required documentation. This documentation is essential for verifying the client's identity and ensuring compliance with KYC regulations. Key requirements of the KYC for opening a bank account in Colombia. There's a number of documents that need to be provided by the customer, like the valid passport or ID, the visa or residence permit, proof of one's legal status in Colombia, proof of income, or maybe the employment letter, tax identification number, the NIT, which is the Colombian tax identification number, initial deposit, proof of address, personal appearance, that is the person need to visit the bank in person to complete the account opening process. Some banks may also need to require a brief interview. Additional documentation for business account, like the business registration papers, tax identification, information about company's shareholders. Reference letter from your bank in your home country, or maybe the bank which you have an existing account. Knowledge of Spanish, not a strict requirement, but have a basic understanding of Spanish can be helped, as most banking interaction will be conducted in Spanish. Step 3 will be verifying the information and conducting due diligence. To verify the information, cross-reference the documents collected when reliable and independent sources. This may involve conducting background checks, verifying the client's employment history, and confirming the source of their funds or income. It is also essential to assess the client's risk level and potential exposure to money laundering or terrorist financing.
Colombia has made significant strides in recent decades to combat financial crimes. Our Superintendency of Finance has implemented a robust regulatory framework that requires all financial institutions, including those dealing with complex financial instruments like NAAF, to adhere to high standards of transparency and control. What does mean in practical terms? It means that when you open a bank account, make an investment, or engage in any financial transaction, the institute is obligated to identify you, verify your identity, and understand the source of your funds. This know your customer principle is fundamental to prevent our financial system from being used for illicit activities. For more complex financial instruments like NAAF, additional control are placed. This is because these instruments can be used to obscure the origin of illicit funds. As a result, financial institutions must conduct a more in-depth analysis of these transactions and report any suspicious activity to the authorities. Why is this so important? Because money laundering and terrorism financing are real threats that impact our communities and economies. These crimes undermine trust in our institutions, weaken the rule of law, and fund criminal activities that endanger our security. By strengthening our AML-CTF regime, we are building a more just and a secure society for all. We are protecting our savings, our investment, and our economy. In conclusion, Colombia has demonstrated a strong commitment to fight these crimes. However, our work is not done. We must continue to strengthen our institutions, enhance international cooperation, and promote a culture of transparency and compliance.
The financial sector has responsibilities that extend beyond regulatory compliance. It plays a critical role in promoting financial inclusion, supporting environmentally sustainable initiatives, and fostering competition within the market. These efforts are essential for ensuring that financial services are accessible to a broader population and that the sector contributes positively to societal goals. However, significant challenge is the high concentration of assets controlled by a few major conglomerates. This concentration of power limits competition and raises ethical concerns about market fairness. When so few entities hold so much influence, it creates barriers for smaller players and can hinder the overall resilience and balance of the market. The sector also faces macroeconomic risks, including commodity price volatility and political uncertainty. Yet, these challenges should not detract from addressing critical issues around consumer trust, maintaining cybersecurity, keeping services affordable, and ensuring that consumers have real choices that are all essential to building a stable, trustworthy financial environment. Colombia actually has a solid setup in place thanks to the Superintendency of Finance, or SFC. They're the ones making sure that Colombia sticks to international standards like the FATF's anti-money laundering and anti-terrorism rules. They're also really serious about protecting investors, which keeps trust in the system high. But here's a real issue. A small group of big financial groups control a ton of the market. With all that power concentrated, competition takes a hit, and it's tough for smaller players to make their way in. This messes with keeping the market balanced overall. And finally, Colombia's financial sector is also looking to step up in a social and ethical way. They're putting effort into financial inclusion, making sure people who need services actually have access. And then there's sustainability. More and more, they're leaning into green financing and pushing for innovation to keep up with the times.
First, let's look how Colombia and Canada differ in their KYC/KYP requirements. In Colombia, account setup generally requires in-person visits, which can make it challenging for clients in remote areas. The Superintendencia Financiera de Colombia mandates these visits, and Spanish is typically necessary for interaction. This limits access for non-Spanish speakers. On the other hand, Canada promotes accessibility by allowing digital verification as supported by the Financial Consumer Agency of Canada. They also offer multilingual support, which ensures inclusivity for a diverse population. Investor protections in Canada are stronger with a clear mechanism for a client recourse provided by the Canadian Securities Administrators. Next, let's analyze these differences through an ethical lens using both rights framework. There are three key areas: accessibility and inclusivity. Colombia's in-person requirement limits access, particularly for those in remote areas, while Canada's digital options align with fairness and access principles. Language accommodation. In Colombia, interactions are mainly in Spanish, creating a barrier for non-Spanish speakers. Canada's multilingual support reflect inclusivity and non-discrimination. And then transparency and the client's rights. Colombia offers limited transparency and a few resource options, while Canada's robust client right and dispute resolution mechanism build trust and transparency. Overall, Canada's practices align more closely with both rights principles of accessibility, transparency, and inclusivity. Finally, let's examine investor protection. Colombia is a member of the Financial Action Task Force through CAFILAT. Some investor protections are in place, though they are less extensive. In Canada, investor protection are more robust. They provide clear channels for a client resource, which enhances accountability and ethical standards, as outlined by the Canadian Securities Administrators. According to both sides, strong investor protection fosters trust and accountability, which is reflected well in Canada's framework. Thank you. These references support the information presented, including sources like What's Right, Ethics and Finance, and other sources. Thank you.